Hello. This is Jonathan, and you're listening to the Johnny Talks podcast, the place where we help you achieve your financial goals. Hello, amigos, and welcome to this first episode of 2020. Hope you had a great holidays filled with too much food like I did, and hope that you also had a great start of the new year so far. And if you're a new listener, I want to give you a special warm welcome to the show. I really appreciate it, and thanks for tuning in. In today's episode, we will speak to my friend Leanna. She's a best-selling author, a money expert, a consultant, a speaker, and she already made tons of appearances on various media outlets such as Bloomberg, CNBC, and Yahoo Finance, for example. She's indeed all over the place. She loves finance, she's passionate about it, and she also is passionate about helping people understand finance better. And today we'll discuss a few topics with Leanna. We'll discuss how millennials approach personal finance, the struggles of personal finance content creators on social media these days, the importance of investing in equities or the stock markets, especially at a young age. We'll then move on to a short discussion about the streaming wars, the streaming services such as Netflix, Disney+, Apple TV+, that have just launched in the US and that will come to us in Europe in 2020. So we'll have a discussion about that, how that affects the markets, the stock markets, etc. And we will end up the show with a few interesting passages of her book, Young, Fun and Financially Free, which I highly recommend to any millennial wanting to start getting serious with their money management. All in all, it will be a very pleasant and easy episode to listen to, especially as Leanna is very good at explaining a financial concept in a simple way, in a simple manner. And she really embodies the young, fun, and financially free spirit. This episode is for you if you're from the millennial generation and want to get started with your finances, but as well it is for you if you're interested into entering the stock markets but have just not made that first step yet. So without further ado, let's get right into it. Hello, Leanna. How are you doing today?
I'm great, John. How are you?
Yeah, glad to have you again on the Johnny Talks. How have you been doing?
I am good. I am hustling and bustling in New York, getting ready for the holidays. I just carried home a Christmas tree up 6th Avenue, about 30 blocks. And
Wow.
Most people would think that that's crazy. But I just thought it'd be a good way to get some exercise today. So that's what I was doing earlier, running around, meetings, phone calls. I'm gearing up for something really exciting with a new client. So just getting into that, which we can talk about maybe at the end of the episode. And just running all over like a crazy person.
Perfect. And glad to have you back. So for the listeners, we already recorded an episode with Leanna about blockchain and cryptocurrency. Because Leanna has been active in the financial world for over 12 years. And I invited her again because she also wrote a book, Young, Fun and Financially Free, and which deals with starting with your finances. And the book is addressed to millennials, actually, correct?
Yes, it is. It's for anyone, usually early 20s to mid 40s kind of thing that is really wanting to start taking control of their financial life and getting to live their best life. And again, obviously, the only way you can do that is by having control over your finances, knowing what you really want out of life, what you want it to look like. So, your top wants and needs. And that's usually where I start with people is say, okay, look at your top 3 wants, your top 3 needs in life. And these things and how this all looks and how you envision your lifestyle is what I call your financial nirvana. So that version of your best life. And that's so different to everybody nowadays. Not everybody has that dream of, what we say here in America, like the American dream, the suburban house with 2.5 kids and two-car garage and a white picket fence. Most millennials don't necessarily want that anymore. A lot of us are more urbanized. A lot of us don't plan on having children or are having children and getting married much later in life. So there's all these different things and ways that your dream life, your best life, your financial nirvana could look like. But you really have to just sit down and say, okay, what are my top needs in life right now? What are my top wants? And what kind of money needs to go into those things for me to get there, and start kind of planning around that? Because you can't get to where you want to go unless you know where you're going.
Hmm. Very good. And we'll touch upon your book a bit later on because I've read it and I had there were a few interesting passages I wanted to comment and ask you to expand on. And talking about millennials a bit more, Leanna, how is their approach to personal finance?
Well, there's some very interesting statistics actually that I mentioned I call them the scary statistics. They're on my website, youngfunfree.com. And there's a study that was done of over 1,000 millennials. And they said that of the responses to these basic financial literacy and basic kind of economics questions, that 69% of the millennials thought that they were equipped with the right information, the basics of money and economic knowledge to be able to manage their income. But really, when they were then tested after, only 24% of them tested to be proficient in basic financial knowledge to do those things, that most people have to do in the adulting world, as we say. So there's a real lack of financial literacy. Obviously, most of us don't get taught it in school, whether it's just money management, like spending and basic saving, or, you go one step further with investing, which is something that, you and I obviously have a really big interest in, and a lot of our audience does as well. So you really have to know the basics, and millennials just statistically aren't there yet.
Mm-hmm. And why do you think that is so? Because 1 out of 4, for a developed country, it seems a bit, it seems very low. So I don't understand this. And why is that?
Here's the thing. It's a combination of things, but so there's been sort of a shift in dynamics of society from, let's say, the 1950s till now, almost 70 years later, going into 2020. Women are now working and in the workforce and making money, and there's that shift in dynamic of household. So, maybe back in the day, let's say, 1955, the husband is the breadwinner bringing home the bacon, and there's no internet, there's no social media. He is by society sort of required to be that breadwinner and the money manager and taking care of the household finances. And so without internet or social media, he needed to go out, figure out how to open up accounts, go talk to someone at the bank, go figure out, okay, well, we have to invest for our retirement and blah, blah, blah. And, he was sort of the role of the person that had to do that, and women didn't have to do that. And because he didn't have social media distractions or internet, it really forced people to physically go out there and do things and get it done themselves, because they really couldn't just take home their paycheck and put the checks under the mattress. You had to physically go into the bank, and they would physically tell you, okay, this is what you have to do with your money. This is what you need to start doing. So there was a lot more manual systems. Now, because a lot of things are so automatic, your money gets direct deposited into your account, and you either spend it or it just sits there making no interest with interest rates we have today. Because you're not investing it. So you're essentially losing that 2 or 3% a year based on whatever inflation is at the time. And, we just have a lot more automatics in our life. We automatically spend more through subscriptions and things like that, online shopping. And, we're not necessarily getting the automatic education and understanding through basic things like what people used to have to do, like, walk into the bank and cash your paycheck. And then that banker would say, hey, have you thought about starting an investing account? That's what everybody does to save for retirement. So I think it's a combination of those things, changing of gender roles, where women are now making money as well, and they weren't necessarily expected to manage that money before, or they didn't even make money before, typically in the household. And then of course, just there's always, as back in the 50s, 1955, whenever, there's always been a lack of financial education in secondary and post-secondary school from, being an adolescent into early adulthood. So I think it's a combination of those two things.
Yeah, very good. And I didn't expect that response actually, but it makes total sense. Because as well, Leanna, in the world of today, and you and I met at FinCon, there's so many media outlets, books, YouTubers, podcasters talking about personal finance. So there's so many resources. Actually, there's never been so many resources and easy access to to that education.
Well, that's the whole thing is that, I say that in my book, gee, you probably saw it. There is so many resources, but there's so many more distractions. I
Yeah.
mean, you're going on social media or going on the internet on your laptop to initially you might say, okay, I'm going to research opening up a discount trading account online so I can just buy some ETFs that cover the broad market indexes, cover, some emerging markets and get some exposure in different areas. Really that basic level of investing. That was your intent when you went on your computer or on your mobile phone to open an account and just start. But then you logged into Instagram and then Amazon popped up. They're having a sale. And then, your Facebook and your LinkedIn notifications. Like it's just distracting. And people find themselves also getting further away from reading. There's less people reading now, but there's more books than ever.
Mm-hmm.
So, again, it's a digital age and people are finding entertainment in so many different places. And unfortunately, those same places is where the education is. So if you're getting distracted by the entertainment and you're not necessarily going for the direct to the information that's going to be helping you grow your money and get to that financial nirvana stage, you're not going to get there.
Yeah, correct. And for example, for content producers, and even writers or educators, how can they get the attention of those people? Do we need to all be, create Instagram accounts or Twitters or whatever? How can we get their attention on personal finance?
I think that is a lot of it. I think if you do have content out there for the world to see and you want to help educate people, it's obviously helpful to have social media platforms like I do, like you do. It's not necessarily an essential, though. If you want to have just small community groups for educational sessions and workshops in your own town or city where you live, and you want to advertise that locally through word of mouth or local advertisements or something like that. Anything you can do to help others be educated and living their best life is a great thing. But yeah, it's definitely a struggle. I'm sure you feel the same way I do in that it's a struggle for me. I'm sure it's a struggle for you, the content creation, the trying to make it exciting while it's still being educational. Like I have had a social media manager, since I went on social media. I went on social media specifically for financial education in anticipation of my book being released almost 2 years ago. And I've had a social media manager since day one because I'm not good at that stuff. I enjoy that stuff for the purposes of what it is, helping educate people and give them a better idea of their own features, of what they really, truly value and want out of their lives and how they can get there. But man, it's a hustle and it's a lot of work. And sometimes, we're not showing cool adventure travel videos or girls in bikinis. You know what I mean?
Yeah.
Like it's tough to get that attention when you're putting a lot of work into the content. So I applaud anyone, such as yourself that is out there, really trying to help people. And, most of us aren't making money off doing this. We just really want to help because we have this knowledge. And like I say, most people don't.
Yeah. And when you open Instagram or whatever, let's say the average Joe, he's not looking at budgeting tips or maybe at looking at stock investing, etc. Maybe the first interest is, as you say, okay, fast cars, I don't know what, dream life, tropical islands and ladies in bikinis.
Yeah, exactly. How can we compete with that with financial literacy? It's been one of my biggest frustrations in life. It's so tough. Like there's the fashion, Instagram models, fast luxury cars and Formula One. If I didn't spend so much time on social media for my business and my work in finance, I'd probably be looking at the same stuff too.
Yeah, very good. And so that's a struggle, and or it's a battle, I would say. And then the people that read your book, Leanna. So who are they?
There's a range. I think. Actually, on social media, I would say my audience is a little bit more people that want to start investing or have already started investing, and they're sending me DMs and messages asking about, buying Bank of America versus JP Morgan, and what do I think is going to happen in emerging markets over the next couple of years, and more specific investing questions. I think a lot of the people that follow me, though, on social media or that read my book, and that goes for both. I think a lot of those types of people have read my book as well. But because my book is an overall Money 101 book, it's really for anyone that has zero knowledge to people that are already investing. Because there's only one. I mean, I come from an investment background and a financial career background in marketing and sales, in investor relations for Fortune 500, FTSE 100 companies, to hedge funds and private equity funds, venture capitalism, alternative strategies and finance, all over the place. So there's a lot of people that read it thinking that it might have more of the investing side, but it really only has one chapter on investing, and then, sort of the importance of investing, because that's how you make your money go from, your salary of $50,000 a year to 80 or 100 when you compound it and you're investing it for your future. That's how you get growth. You cannot grow your money any other way in this world than investing it. It can't just sit in your account and do nothing. If it sits there at all, if you don't spend all of it and live paycheck to paycheck, which that's the biggest problem for most people. So then there's people like that as well that really haven't started just getting good with money and like the Money 101, much less even thinking about opening up a trading account or investing on their own or getting their finances managed professionally by a financial advisor. Yeah, there's those people that are reading sort of the beginning chapters of the book that's like, here's two different types of financial hopelessness. People that need to give their head a shake and like just get yourself together. You got to stop spending it all. You have to put some constraints on yourself with however much income you have, depending on what you want that financial nirvana to look like. And then there's, another group of people that maybe just need to break the cycle. They grew up in a socioeconomic area where nobody ever expected anything better of them than to live paycheck to paycheck, or to be on social assistance, or to not go to post-secondary education because nobody else they know or in their family ever did. So there's people like that where, that's a lot harder. You're breaking your mindset of what you grew up with and what you were reared with from a child. So there's people that just need to learn those basic spending and saving skills and how credit cards work and things like that. So that's kind of why I say the book really has a whole range of people reading it. But because I do come from an actual finance background in some of the more heavier financial fields, a lot of people, I think, follow me and connect with me to try to get some of that more investing information and insight. So yeah, it's a little bit all over the place, to make a long answer short.
Yeah, but then it means that the people that follow you, it means that they had a genuine interest into knowing more. So yeah.
Of course. I mean, that's the whole thing. I think, so I do have a business manager that I work with here in New York. And he manages sort of my relationships with financial institutions and brands that I want to partner with or do public speaking for and things like that. And, in the influencer world, in terms of financial influencers, you don't need to have a ton, like tens of thousands, hundreds of thousands, or a million followers on your Instagram or anywhere else to be really giving an impact and really helping a lot of people. Because number one, less people are going to DM you than any other type of account, because people have a real shame around money and they don't necessarily want, and especially the comments on my posts. I get way more DMs than I get comments on my actual posts. That's 100% for sure, because people, they want to know the answers. And some of those people that are really driven to get to the next step and start investing, or, continue investing and really try to grow that nest egg that they have and that income that they're getting, they'll send me a DM and ask me a question about something more specific, or maybe a question about something I posted on my Instagram story, or a post that I made, to get more information. But yeah, they're kind of shameful to put it out there in public and ask it as a comment on one of the posts, because they're like, oh, well, shouldn't I know this? Doesn't everybody know the answer to this? No, if you're the one that's interested enough to even ask the question and learn more, you're probably already 10 steps ahead of the general public. So I try to encourage people that send me DMs to please post it on a comment in one of the posts, because I can guarantee you if you're DMing me and asking me the question and you have the gall to do that, there's probably 100 times more people than you that saw that post, really wish they knew the answer to that or had thought about it before, but they just didn't have the guts to post it as a comment in the question or to even DM me the question. So, yeah.
Yeah, and it's a very good point you're making there, because as well, I've received a few DMs, and for example, I had received one on Bitcoin and cryptocurrencies, and some lady, I mean, she never asked me anything. And after 3 years, she's like, hey, by the way, you're the only one that I know who talks about Bitcoin and cryptocurrencies. I mean, I'm far from the only one, of course, and I'm far from being an expert, but I have the interest. But at least she reached out to me to ask me a question. So, I mean, if I put something on Bitcoin and cryptos or whatever topic, money, books, yeah, please, sure. Make a comment. It's worth more than sending me a DM. But of course, I will not stop you from sending me a DM. Please do so. I mean, I will gladly help. And I think if you follow Leanna, she will gladly help as well. But yeah, please make comment on our pictures or on the stories, etc. It's great.
Yeah. Yeah. And of course, we always want people to still send questions because, if you're one of a million people that's actually here doing it, motivated, wanting to learn more, like that's what we're here for. That's what we're giving all this effort to. So, of course, we'd love to have them engaged publicly so that everybody else can benefit as well. But yeah, I'm willing to help anyone that's out there and asking. So
thank you. Very good. And Leanna, since you're, you have a strong financial background. I was wondering, what would you say to someone wanting to start investing in the stock market? Is it a good idea? Is it a bad idea? Or how does one go about doing that?
Well, if you want to and you haven't started yet, you have to. It's funny, I actually did an interview once, a live TV interview, and one of the hosts said, and I hope they don't listen to this podcast. I won't say what show it was. I won't even say what city I was in because that will give it away maybe. But yeah, this person was saying, oh, well, investing is great and everything, but I've been investing for years. And this person was quite a bit older than me, maybe, 15 years older than I am, I would guess. And, saying, I got burned by the stock market back in the day and I'll never invest any money in stocks again. All of my money is in real estate. And we were on live and I said, oh, well, that's not really, as we say, a great way to be diversified because, having some investments in real estate's great. But the real estate market tends to move in cycles and move as a whole. And that is not a great way to invest your money. And I just couldn't believe it because I've actually never heard someone say that before. And we were live. I was like, and it's kind of hard because they're the host of the show. I mean, how can you tell them that they're wrong? Mm-hmm. But this person is 100% wrong. I mean, if you put all your money in the stock market, that's not good either. Again, you should be diversified. You should have some bonds maybe that are conservative and, a guaranteed return at much lower return, or treasuries or CDs we have here in the US, GICs in Canada, like guaranteed investment certificates that are going to give you, right now they're only going to give you like at most 2.5% or something like that. But at least they're keeping up with inflation, and then invest in stocks, and then get some REITs, some real estate investment trusts, or, buy a property and rent it out or something like that. Have an Airbnb running. There's so many different ways to diversify. But if you are someone that's 40 years or younger, I believe that your primary portfolio structure should be filled with equities. Because you have again, depending on what your financial goals are, depending on what your risk appetite is and your risk profile, you'll hear that term 100,000 times a day on financial news media and networks. But you really need to have stocks. Like you have to buy stocks because they, big public companies around the world and utilities and, energy and consumerism and consumer goods, groceries, all these kinds of things. Like those companies are making the world turn, and they have the highest investment returns, really, of any asset class of investments. And equities, which is stocks, we tend to say that it is a more riskier asset class to invest in. So, a lot of people, they might want to be like, I'm almost 100% equities right now because I sold real estate recently. And I'm actually holding a lot of cash as well, more than I'm usually comfortable with, because I'm waiting for hopefully a recession at some point, which is so funny because you'll see on Instagram sometimes. I reposted one of my stories the other day, like a funny photo of some guy looking all like he was hyperventilating and frothing at the mouth and just very excited, but looking crazy. And it just said, and the quote above it is, every millennial waiting for the next recession to get into the stock market and buy real estate, which is pretty much exactly where I'm sitting at right now. And a lot of younger people are to sort of get stocks on sale, as we say, when there's a good buying opportunity, when the markets are down. We've had a few down days in the last month or so. I'll look for opportunities to pick up a few positions or add to some of my positions that I have in owning stock right now. But yeah, I mean, like, because they're so much riskier than bonds with guaranteed returns, or, CDs and treasuries and things like that, which, yeah, again, they're guaranteed, but not going to make you hardly any money. They'll barely keep up with inflation. You got to be invested in things that are going to actually bring money back to you for your retirement. And again, that retirement is decades away for you at this point, if you're in your 20s, 30s, or even early 40s. So you have a lot of time to recover from a recession if your stocks do go down. And the biggest point of importance with that is, say right now, today, you put $10,000 in the stock market in an emerging markets fund, U.S. like New York Stock Exchange, S&P 500 index covering the U.S. markets. And yeah, you just split it half and half, emerging markets and covering the U.S. stock market. What if in 2021 we get a recession and they go down 25%, even 30%? Just don't touch it. That's the whole big thing. Just don't touch it. If you have a money manager, just tell them, don't sell it. I've got 30 years to retirement. I've got 25 years. I've got however many decades you have to retirement. That's the whole point of buying stocks, is that it doesn't matter what happens in the next 2 years, because you're a long-term investor. You're not a trader. You're not going to trade in and out of that ETF or whatever fund you invested in to get broad market exposure in emerging markets in the US. You're holding that for a very long time. And when we get those recessions and when we get corrections and bear markets, which happen every year, they happen all the time, you just can't sell.
Yeah, correct. And actually, it reminds me of a funny anecdote of a few weeks ago here. I live in Luxembourg right now. And then since I just moved from Norway 1.5 years ago, I just opened kind of a tax advantage retirement account. And before you open that, you need to go there and sign some papers that you know what you're doing, basically. And so, you have to answer a few questions, it's a kind of compliance questionnaire, you would say. And then they ask you, do you know about investments, about stocks, etc. So, of course, for me, it's I get a straight A on those questions. And there was a question, for example, and the banker asked me, you put 10,000 euros, but there's a market correction of about 20%. What do you do? Do you continue to invest, or do you sell everything? And so I said, well, I'm buying more. Is that an option? I said, oh yeah, that's a point C. So, okay, all this kind of questions. She was surprised. She's like, well, you're confident. Well, I said, well, if the average market returned 7% for about 100 years ago. Okay, past prediction doesn't mean that it will continue like this, but normally, I can expect about 7 to 8% growth over the long haul. So I'm not too worried. And she looked at me surprised. I'm like, well, yeah, it's basic. It's not basic, but this is what the stock market does.
Yeah, no, but that's the thing. It is basic. And once you hear it once or just a couple times, like even though, you obviously have a lot of financial education and background, so do I. But this is the kind of stuff that for everyday people, whether you're a nurse, an engineer, you're working the railway, you're doing whatever your job is that has nothing to do with money and finance, that's a really basic thing that as an adult you need to know. And like it literally, this is the adulting stuff that
Hmm.
you don't learn in school. And yeah, they didn't teach that to you in grade 1 through 12, or when you were in post-secondary school for engineering or nursing, or a trades, or if you work at a supermarket. You didn't learn that. So these are the kind of things that people really have to educate themselves on. And unfortunately, it's like I always say, nobody's going to create your dream life for you or your financial nirvana where you're comfortable and you feel free and happy in your finances. No one can do that for you except for you as an adult in your 30s or your 20s or 40s or wherever. It's like your parents can't manage your income for you anymore. You're managing it all now. So whether your parents knew anything or they knew nothing and they have no money for retirement either, like a very big majority of the rest of the world, it's your responsibility now to learn the basics like that. Like, hey, there's recessions and corrections all the time. To be able to make 7, 9%, that kind of return in your money, that your hard earned dollars that you're going to work every day for, you have to invest in stocks. And you got to be prepared when you invest in those stocks and those funds that, with those corrections and recessions, it is going to go down. And if you log into your account or you go ask your financial advisor, hey, what are my balances looking like? What are my returns looking like right now? They will be down. And the important thing is to just know that you're doing the right thing by being invested, stay invested. And in the long term, you will be so happy that you did.
Yeah,
But yeah,
absolutely.
you got to do it for yourself. Like literally no one can drill into your brain these super basic things, other than you going out and finding the information or hopefully just hearing a podcast like this. And then really like my whole thing is to tell people something like that and make it not such a big deal. Like, okay, here's the facts. It's really not a big deal. Okay, if you're going to log into your trading account every day, your financial advisor platform or whatever through your bank online, and you're going to look at those balances every day, yeah, it's going to freak you out when you see they go
Mhm.
down 20%. But you just have to know that it historically, believe in the historical returns, believe in the statistics, that it will not be that way forever, and you will be fine for retirement and your long-term goals, maybe, saving up for a down payment for a home or something like that as well. If that's what your goal is, and you just have to know you're doing the right thing and just take it easy, like just chill,
Yeah,
learn
absolutely. Yeah.
very basics. Don't go watch CNBC or Bloomberg and be like, oh my gosh, how am I going to learn all this stuff? You don't even need to know 1% of what they talk about on TV. You don't even need to know 1%. So hopefully anyone that's listening to this that is extremely overwhelmed by finances and what they see on TV or what they hear in publications or magazines or the newspaper with the finance section, you don't even need to know 1% of it. You just have to know real basics.
Mhm. Now, when I talk to my friends and my entourage in general, and of course, I mention my podcast and my blog, and they say, yeah, but stocks, this and that. And yeah, but you need to watch every day. I said, no, I watch maybe, okay, I follow it up, but like I follow it up every quarter or every month, but not every day. I mean, I said it's useless, but okay, I think it's as well, it's a habit. It doesn't come straight. I mean, probably the people that will just start to open an account, they will watch it closely every week or every day in the first days, but then with time you will space out your I mean the time you check it. Yeah, at
Exactly.
least that was my experience when I started. And just a last question to close this chapter, Liana. You mentioned index funds and S&P 500 and emerging markets, but would you also recommend to invest in individual stocks?
For sure. I think, I do. I think if you have the education, the understanding too, then you should. But that is by no means a place where anyone should start, which is also why it's difficult to listen to the financial media sometimes, because they do generally speak very specifically about different companies and how to invest in them, or not how to invest in them, just investing in them. Or do you have a buy or a sell or a hold call on this? Or what are analysts doing? Or have analysts upgraded the stock? I mean, they don't talk like that for ETFs that are just covering the general, emerging markets funds, or the US like S&P 500, which are the 500 biggest companies, public companies funds. I mean, I like to say to people that are just getting into investing, like, this is what those kind of things mean, which is why funds are really good. An ETF, an exchange traded fund, is a fund that has a very, very cheap management fee, like less than 0.5%. So super affordable, super cheap. And, there's a million different ones of ETFs. Like, you can just Google ETF S&P 500 and you'll find some ones that are trillions of dollars, or they have trillions of dollars of people's money invested in them. And you would buy something like that if you are, say, 30 years old, and you think in 35 years when you're 65, if you believe in the general prosperity of the American economy, which the 500 biggest public companies in the American economy is the S&P 500 stocks, if you believe in the general prosperity of the American economy, that it will be much further advanced in 35 years when you retire, if that's your goal for this money for investing, than it is now, then you should buy a fund like that. And that will be a very good basic place for you to start with your investing. And then, maybe a year down the road, or a year and a half, 2 years down the road, you can start doing some more research about how to research individual stocks that you might have an interest in, or, other ETFs, because there's other ETFs as well. I mean, we like to say there's an ETF for everything. There's an ETF for the luxury fashion sector. There's an ETF called PETS, PETS, that only invests in great companies that help, serve you and your pet's life. Because, I'm a dog mom and I love my dog, and most people have animals, really love them and spend money on them. There's millennial ETFs. There are literally ETFs, lots of them, that are made specifically for millennial investors on kind of those millennial themes, like Amazon and Netflix. And, there really is an ETF for everything. So maybe instead of going and jumping right from index funds covering emerging markets, the US, Canada, wherever else you want to have investments in, or be investing in those general economies really through one of these funds, you can start buying some more trending specific ETFs. Like, I have ETFs in the cannabis sector, in artificial intelligence, in gaming, in cars and electronics, in fashion. I have tons of different kinds of ETFs within my portfolio personally. So there's really an ETF for everything, and that's a nicer entry into jumping straight into individual stocks. It also gives you a lot better diversification, and somebody is managing that fund for you for super cheap. Like I say, less than 0.5%.
Yeah, excellent. And I didn't know there were ETFs for millennials, but okay, that's great.
Yeah. And their management fees are, between 30 bips, we say 30 basis points. So like 1/3% to 0.5%, or, just a little bit more than 0.5%. So they're super cheap. I mean, a lot of them, like I say, have a lot of those growth names, which are pretty highly valued right now, is the only comment I would make on that. Again, we're not giving specific investing advice or opinions on this podcast. But a lot of them hold those big growth names, which are looking pretty expensive right now. So that's the only thing I would be aware of. But really, the ETF space is so cool. I can't believe how much it's developed in the last 10 years. And there's really cool ETFs out there.
Yeah, absolutely. Thank you for those valuable tips and insights. I mean, like, for example, the millennial ETFs, which I didn't know about. And as well, you were recently featured on Yahoo Finance, talking about the streaming wars of all the big companies, Netflix, Disney, Apple, etc. This is something I wanted to discuss with you, just to not to give specific stock advice on those companies, but just to have an idea of where this is going. Because, okay, now it's in, Disney Plus launched in the US. and I think it's as well in Holland last weekend. And this will come over as well in Europe. Like I think they will launch in France, Spain, and Italy in March, and then they will roll into more countries in Europe later on. And then, okay, we already have Netflix, which is big here as well. And then Apple Plus just launched as well here in Europe. So can you tell us a little bit more and guide us through this jungle of streaming wars?
Yeah. So, I mean, Disney shares when I was on, I host the Yahoo Finance Wi-Fi PM show every month. I'm going to be on there again on December 5th, if anyone wants to tune into that live for an hour. So, over the hour we spoke again about tons of topics, but streaming wars that day, Disney shares were up 8% since their launch of the Disney Plus. And, Netflix was also up that week. And I think it's because, there's just a general trend and belief that, again, more people are going to be leaving cable and just going straight to streaming only services. The Disney Plus had 10 million signups in their first week. So, I mean, their streaming services, there's obviously demand for it. I think that their market is very different from the Netflix market. So obviously Disney programming has all of the things that are family and child friendly. So, that might be a nice add-on to Netflix households because Netflix is more targeting the teenagers and the parents. But, for an extra, I think it's $5 a month or $6 a month, they can get Disney Plus. And then, they can entertain their kids and their nieces and nephews and grandkids when they're over as well. But, although it is a different consumer base for those two specific different services now, what happens when Netflix says, hey, we can't, if we want to keep driving our membership growth and people keeping our memberships, we need to start developing some more child-friendly content. I mean, they do have a family section on there and some kid sections, but some of the stuff that's newer and exciting that kids really want to get. So people aren't going over to Disney because Disney is also going to develop their adult content as well, I'm sure. And that's where we really get into the streaming wars, as we call it, where who's going to start developing content that is trying to take market share from the other competitors category. And, the cost of creating content is also increasing. It's becoming very expensive for Netflix and everyone to create TV shows and movies that aren't on cable networks that are only for their streaming services. Netflix also reported recently, and their memberships are slowing. So they've seen a slow in their growth. I don't know how you feel about Netflix's content, but I don't really watch my Netflix much anymore. Like there's not, they have a lot of their kind of campy, comedy, kitschy little unique kind of shows that are the Netflix shows. And I've watched a few of them and a few of the movies, but a lot of them aren't great. They haven't had a really great big new release in a while that I'm aware of. And yeah, I'm not loving Netflix, the content that much anymore, but it is getting expensive. There's also other competitors that are coming out of the woodwork. NBC has streaming. There's Apple TV, which was pretty new as well. And that Apple TV is definitely going to be developing their content further. And I'm sure that they're going to see membership subscription growth as well. HBO is coming out with a streaming service next year. So yeah, there's a lot of competitors for both adult and child consumers, and the cost of content and content creation is only going up. So I don't know. It'll be really interesting, I think, to see where these companies go in terms of their content, their balance sheets, in terms of their costs and their subscription growth, and how that plays into the valuation of these stocks. That a lot of them, they're already valued as growth stocks. So I don't know. I don't really know how much further they have to run. I am not an analyst in the sector, so I don't have that strong of an opinion about each of them really individually, but it will definitely be something interesting to watch. What are your thoughts?
Yeah, well, I don't have specific thoughts, and I'm probably the worst clients for this these streaming services because, okay, I have Netflix right now, but it's like a love and hate. It's not love nor hate, but I subscribe for 2 months and then I don't watch Netflix for 8 months, for example, just because I don't have time.
Mm-hmm.
I mean, or I don't prioritize it. And right now, the last thing I watched was actually kind of I like the documentaries though.
Yeah.
Which is the thing I watch the most. And I've watched, and for the rest, I don't watch much. And then sometimes I watch, but then I get fed up simply, or I feel I'm wasting my time. And I'm just not so entertained anymore. I mean, I went to watch the Joker at the movies. I loved it. And I'd like to watch it again, maybe when it's on streaming. But otherwise, I'm not so excited anymore for movies. And that's me personally. But then regarding the topic again, the stocks or the streaming wars. Well, here in Europe, so Netflix is quite popular and most of the people have it. It's pretty common. And Stranger Things was a big hit, for example. So Netflix got a lot of viewers. I don't have specific numbers, but then now we will receive Apple Plus, Apple TV Plus, and Disney will come. I think Disney will be a big hit as well for family with kids, as you say. And as well, there's the Star Wars touch to it.
Right, yeah.
So that will capture quite some market share. But then I don't see how Apple TV Plus differentiates itself from the competition here. I don't know if you have views on that, but I mean, I'm very excited to see and as well, I have individual stocks from some of those companies. So I'm also excited about that to see how it will all play out. But I'm mostly interested to see how the landscape will look like.
Yeah, I mean, I haven't used the Apple TV myself, but I mean, they're not stupid. Apple is going, for lack of a better description, yeah, Apple is not stupid and they have tons of cash to invest in their streaming. And I'm sure that, they wouldn't have launched it if they didn't want to dominate. And I expect that they will. I expect that they'll do well. I don't know what kind of content they're coming out with, but yeah, I'm sure that they're forced to be reckoned with. So it'll be really interesting to see. Do you would you mind disclosing which stocks that you own and what your sort of theory was when you bought them? Because I do say if anyone is wanting to buy an individual stock or anything, a fund, you have to have a reason why you want to buy it, and you have to have a reason why you would sell it. What would be your reasoning for selling that stock or that fund ever? A lot of people, like if you're just buying those funds, ETFs that cover the main indexes, the main markets around the world for 30-year, 40-year long-term growth, you might just want to say retirement, and I think it's going to keep growing forever. But in what circumstance would you sell them?
Mm-hmm. Well, I hold some positions in Apple and in Disney, so individual stocks. And why? Okay, so for Disney, I read a few articles, and I knew they were going to launch this streaming services 2 years ago or 1 year and a half ago. I think I saw a few articles. It was as well in the period where I wanted to invest myself in more dividend paying stocks. So, and I thought Disney was a great fit because one, you have the parks, you have the streaming services, the content is huge, and I don't see it going away in the next 15, 20, 30 years. So for me, this sounded like a great investment at the time. And actually, when I bought, it was a bit in a dip kind of. And then, but I read a few articles, I checked the financials, and it looked good for long term. So I was like, okay, I'm going to put a little bit of money into it, and we'll see how it goes. And for now, if we just look at the valuation without the dividends, I've been gaining almost 50%. And it's a stock, for me, I love it. I will keep it forever. It looks good for now, but I will keep it. I wanted to keep it for a long time, and I think I've added up a little bit, 2 months ago. So I'm confident in Disney. And regarding Apple, this was one of my first purchases. I didn't really do much analysis on it. I thought, look, I might as well buy into this company. It looks good. It pays dividends, but that was like 4 years ago or something. So it was when I started my journey. So I wanted just to invest in a few companies, and okay, on this one, hey, let's be honest, I didn't do my research properly, but I've been keeping investing over the long haul. So it turned out well as well. But for now, I see it more like, yeah, it's great. It's a great company. It pays a dividend. They're always forward thinking. Let's see how the streaming wars that will lead them. But yeah, I didn't do my research. Guilty me.
Well, you know what? I have hope for the long-term future for those. So I'm sure you're pretty well set, and you've held them for a while. So it's not like you're buying at the height of the valuation. So good for you.
Yeah, thank you. And Leanna, so you wrote this book, Young, Fun, and Financially Free. So I've read it. So thank you for sending me a copy. I really enjoyed it, and I thought it really fitted well. The format and the tone really fitted well. Millennials trying to get more interest into their finances.
Well, that's the whole goal. I hope so. And 100% of the proceeds of the book go to the We charity, which provides income and economic stability opportunities for villages that they build in third world countries, primarily in Kenya. So I think it's important to know and just sort of give a reminder to everyone that hears about the book or reads the book that, if you think you are in a bad financial position right now, whatever that may be, if you are living in a Western civilized country, you have 100 times more the opportunities to change your financial life, turn your life around, and live that financial nirvana, whatever that may be for you, more than hundreds of millions of people around the world that will probably never be able to get out of their circumstances, of which they were by luck born into. So I think that's why it's really important that the money go to charity for the book. And yeah, it's on Amazon and all of that. So I would hope that anyone listening to the podcast would love to have you buy the book. It's available worldwide. And I think it's just a great organization to be tied to. It's called the We Movement.
Yeah, no, I'll link it all up in the show notes. And I've read it. It's very good. I think it's very practical. It's short. And as well, there's some aspects that you touch upon which I didn't find in other personal finance books. So it's really an added value because first, what I really liked is that you start with the mindset. Most personal finance books start with budgeting, etc., and not always with defining your goals, etc., which I really liked. And there's one topic, because I don't want to describe everything, and people can find information on Amazon, etc. But there was one topic I wanted to maybe expand more, is the dream team.
Right. Yeah, that's one that people don't talk about. But again, it's a huge part of adulting, knowing, who you can reach out to for advice. And, I say your dream team that you build in your 20s and 30s, or as you're going through different life experiences, is those people in different areas of your life that, I hope a lot of you don't have to need them like I have, but you might have to reach out to. So, when I was in my 20s, and that's actually another reason why I wrote the book. I wrote the book when I was 29 before I was 30, because I kind of thought, and, maybe not compared to everyone, but compared to a lot of my friends, I had been through lawsuits and 3 different house floods and robberies and just crazy stuff. And that's just, on the public, sort of the public stuff. And there's, a lot of personal things that went on, hardships in my life throughout my 20s. And throughout these different experiences, what's nice about having those things happen in your 20s is you got a lot of time to bounce back. Same thing as investing in the stock market. Mm-hmm. You buy equities and stocks. And, if there's a recession or, a long depression, you have a lot of time to recover because you're still young. And that's why we say to buy stocks when you're young. And so you can see those multiple years of compounding returns. But back to the whole dream team thing. So by the end of my 20s, I had been through all these crazy situations, and I had built up, insurance advisors I was using, lawyers for different things, accountants for different things for business and personal. My mortgage broker was such a great tutor to me when I was 21, teaching me all about real estate investing in houses and mortgages and how you can write off the interest of your mortgage against your income tax. And, all these different things that I learned through good situations, like buying my first home really young and making some good money off that, some good returns until my early 30s. And, bad things as well, and how to recover from them, bounce back. That's something that a lot of motivational speakers talk about, is like the bounce back effect. And sometimes things have to go wrong before they go right. And you really have to have that ability within yourself to be able to bounce back from negative experiences. And when those negative experiences happen, having a network, a dream team of people of support around you is so valuable. So that's why it's really important. If you ever have a question about something when it comes to investing or accounting, or you might want to buy your first apartment or anything like that, reach out, talk to people. Ask your parents or your uncle or aunt or friends of friends who've already bought places. Hey, what realtor did you use? Hey, did you use a mortgage broker? I hope they did, because they can usually get you way better rate than walking into the bank. But they can, reach out and start talking to some of these people. And you may not even need to be using them right now, like a lawyer or whatever. But if you have a question like, hey, okay, so I just bought my first apartment. My neighbor's apartment got broken into and flooded, and they got sued for like over millions of dollars. Like, wow, they had to get a lawyer. It was a whole mess. Oh my gosh, I just bought my first place. How do I prevent that from happening to me? Well, maybe you should go talk to your neighbor, and maybe they want to give you a referral to their lawyer, their insurance adjusters, or, their insurance brokers, to make sure that you have proper renter's insurance and proper owner's insurance if you're owning the place, like the example I just gave, because you should probably make sure that doesn't happen to you. And I'm just giving an example of something that may or may not have happened to me. So like, crazy stuff in this world happens, and that's why, when it comes to finances and stuff, it is not always your fault. I think people get that, the crazy stuff happens. You have to deal with it. That's why having an emergency savings account is so important. That's one of those basic kind of money 101 things that everybody talks about, having 3 to 6 months or even 9 months if you can saved in cash in case something major happens. And you lose your job immediately. So you don't have to put those kind of expenses on your credit cards, because then you got to pay, 15, 25% interest on those purchases, or that medical save, or whatever it was, saving you from having to go into a really bad situation. So and having those dream team, those people around you. Most of those people that I have in my life have been around for 10 years or something, since I started doing adulting activities in my early 20s. And oh my gosh, a lot of them were so negative. And it sometimes, the last few years, it just felt like they were happening one after the next. And they were, but I think it has made me a stronger and more knowledgeable adult for it now, going into my 30s. And hopefully some of the stories and experiences in the book will help other people as well. I mean, there's also not even just your dream team, but just in terms of the bounce back, which is such an important thing. Like, I have a story in my book about Steve Harvey, the comedian. Most people know him. He has his own show, world famous comedian, actor. And Steve Harvey, I met him 3 years ago now. I met him at a financial conference, and he's such a great guy. And, most people don't realize Steve Harvey was homeless until he was almost 40. I mean, he had a wife and kids, 2 babies he had left behind to go try to make it as a comedian. And then, they were kind of out of touch for a while because he was homeless, living in his beat up car, trying to get a stand-up gig for $50. And he was like 38, 39 years old. He didn't get his first big break until his early 40s. He started performing in New York. So, there's a lot of these stories of celebrities that people find so inspirational now and unattainable. But unless you really dig into people's stories, you don't know. Most people have no idea. He's extremely wealthy, a huge celebrity now. But you can have a comeback at any age, and you can have a bounce back at any age, same thing. And it's really important to read and hear some of those stories. So I've included some inspirational stories of people that I know, celebrities and non-celebrities, in that book as well, just to give some inspiration. Because I do think inspiration is really, really important. Inspiration, seeing that other people have been able to bounce back as well, and then the action steps to be able to get to where you want to be.
Yeah, absolutely. And in your book, there's as well, just I want to just end up with that. It's seasoned with really interesting quotes. I will just read one because it really, because I met you and I follow you as well on Instagram. So I know you personally, so it really makes it funny for me. But there was this one quote that I really enjoyed. We want everything so fast that we are the ones becoming slower. Slower mentally, physically, emotionally, spiritually. And the man that said this is none other than Pitbull, the singer on the Tony Robbins podcast. But I really like the quote, first of all.
Yeah.
It's actually great. But as well, it's a bit, you don't expect those kind of quotes or from those people, let's say, in a personal finance book. And there's some from Mark Twain, etc. It's really funny.
Yeah, that's the whole thing. I mean, actually, I heard him on Tony Robbins' podcast 2 summers ago while I was writing the book. And I was like, that quote is amazing, because that's exactly what I was speaking to at the very beginning of this episode about how, we didn't, in the 1950s, men that were managing the family finances, they didn't have this fast, automatic information life. They got a physical paycheck and they had to go to the bank and do something with it. And at the bank, they would say, okay, here's how you learn about investing. Here's our pamphlet about it. There's the advisor. Go talk to him about it and then go do something with your money to invest it. And people did that. And that's how they learned. But now you're not walking into the bank. You're not walking in and someone's not telling you, go talk to that guy about it. He'll teach you. There isn't that system anymore. And our brains are becoming slow. We're not reading enough anymore. So it really feeds into that whole thing.
Okay, very good. So, Leanna, thank you so much for all your valuable insight on the podcast. I think it will help many people. And before we head off, I always ask 3 quick fire questions to all my guests. And the first question to you is, what is your best investment so far?
Actually, of all things, no, I can't say, you know what, honestly, most of my stocks that I've invested in are what we say unrealized gains, because I don't sell them. I'm a very long-term investor. My best performing stock to date, it would have been Apple if I didn't sell Apple when I was about 26. So.
Okay.
But I have held Bank of America since the last recession in, I think, 2010. End of 2009, beginning 2010, I bought a bunch of shares of Bank of America, and they're up like 500%.
Wow.
Something crazy. Yeah.
Okay.
Don't quote me. That could be wrong. But it is by far the best performing stock in my entire portfolio. Aside from that, real estate has done me very well. I've doubled my money on my real estate investment recently that I sold last year. That was a fantastic decision as well. Something that I bought in fall of 2010. So, that was in Vancouver, Canada. Didn't get a huge correction in the real estate market there, but I did get a good deal for what it was. And almost doubled my money in about 8.5 years. So
good.
Yeah, so that was really good as well. And I'm looking to buy another place now. I love real estate. I find it so exciting. And I'm addicted to HGTV shows where they flip and flop and flip and whatever, renovations and stuff. I love doing that. So not myself. I'm a delegator. Manual labor is not my thing, but I'm very good at hiring people that are not too expensive and are good at what they do.
Part of your dream team.
Exactly. Oh my gosh. The realtors on my dream team, the contractors. Oh, there's so many people that you need on a dream team. So yeah, all really important sources of information. And like something like that. Perfect example. Contractor and realtor can tell you, hey, where is the most important place to put my money when renovating my home? Because, I really hate my bedroom carpet. I'm going to get a new carpet and I want the nicest carpet and I'm going to spend $10,000 on carpet in my bedroom. Well, a realtor or a contractor would probably tell you that when you're going to sell a detached home or an apartment or townhouse, whatever it is, that the bedroom carpet doesn't really matter much. No one's going to care if you have some luxury carpet in your bedroom. It's the bathrooms and the kitchen. So focus on the bathrooms and the kitchen, have a neutral color on the walls. Do some new painting, like stuff like that. Those are the dream team people. You gotta get your team together.
Very good. And second question, what is your favorite book? What is the book you would recommend to anyone? And it does not need to be financial.
I'll give two. One is quite female specific. I was just reminded of it the other day. Years ago, I read the biography and sort of stories from Diane von Furstenberg. Do you know who she is? She's a fashion icon, and she's had a company called DVF, Diane von Furstenberg, for decades. She's probably in her mid 70s now, and her biography and sort of book of stories of business and the business of fashion and her life growing up is called The Woman I Wanted to Be. That's a very, very good biographical and business book. I have an entire list of books in my phone, actually. I'm looking at it right now. One of my most recent favorites, my absolute number one mentor is Ray Dalio, the investing legend. He has come up and come down and back up again in his career a couple different times. And, he's completely self-made billionaire. And his newest book called Principles is incredible. Principles on life and principles on business, and how people should be working together and living together. And Principles by Ray Dalio is amazing. I'm also reading such a classic right now, The Alchemist. Have you ever read it? I actually had never read it until this month.
No, I haven't read The Alchemist, but I think I will definitely add the Ray Dalio book on my list. That's for sure.
Oh, yeah. And they're all available on audio too these days too. So a lot of books. Sometimes I'll, Unshakable by Tony Robbins. I say that's kind of like a step 2 of the investing side of my book, because it's a collection of him interviewing guys like Ray Dalio, Ben Bernanke, and all these other investors and economics experts, and putting it into a book that's actionable steps toward investing and investing intelligently through the works and theories of these people. So that's available on audio. They're all available on audio too. So, go for a walk outside, get some exercise, get your brain active. Health is wealth is a huge thing I talk about all the time. So go for a walk or bike ride or something and listen to one of these great books and be inspired to go get that financial nirvana.
Yeah. And I really like, I have subscribed to Audible, and it's great because it helps me read more faster.
Mm-hmm. Exactly. Yeah, you can get through a lot more that way.
Yeah, very good. And then the last question, it's what is the best purchase you have made for under $100?
This is a tough one. There's so many things I was just going to say, but then I was like, no, my dog was like, his adoption was $300. My iPhone, that's such a good source of information and organization and entertainment, but no, that was more. You know what? I would say my pillow that's specific for side sleepers, because sleep is such an important thing. This is another amazing book, amazing person, company, app is Thrive by Arianna Huffington. And in Thrive, and it's her new company. They have an app. It's all talking about how to balance your lifestyle and your work life and financial demands, children and spousal demands. And we really only can thrive in an environment when we're well rested and we have a clear head. And we're also giving ourselves daily activity and exercise and healthy nutrition. Again, it ties really all into the whole health is wealth that I talk a lot about on social media as well, because to be able to be motivated and driven to make the right financial decisions, to learn those basics, the 1% of all the stuff in the financial and economics world that you need to know to really be successful as an individual investor, an individual person who has an income and needs to manage it. Is that health is wealth stuff. You got to feed your brain and your body, and you need to move and exercise and get your endorphins going and get your mind energized to be able to make those kind of decisions. So Thrive is a book and it's a company by Arianna Huffington.
Yeah, very good. I could not
Yeah.
agree more. So,
She
Leanna,
also wrote a book called The Sleep Revolution, which again is why my sleep is so important. And I have to get 8 hours a night or I feel like a zombie and I can't get through all my entrepreneurial hustle and bustle and my workouts at the same time. So, yeah, got to invest in a good pillow for sure.
yeah, very good. And Leanna, so thank you so much. And for the listeners, I think they will be interested after this episode to get to know you better and more. Where can they find you? Where can they find your book?
Well, my website is youngfunfree.com. My book is called Young, Fun, and Financially Free, and it's on all the different Amazons, and would love for anyone to grab that. Again, 100% of the proceeds go to charity, so it would be a great thing to do. I am on Instagram at Leanna, Leanna _Hawk, HAWK. And that's because the name of my company is Black Hawk Financial and my last name is Hawkins. So from a very young age, the brokers and guys I was working with called me Little Hawk. So it's Leanna _Hawk on Instagram and Leanna Blackhawk on Twitter. And you can just kind of find me everywhere else. Leanna Hawkins Official on Facebook, and I'm on LinkedIn if you want to add me. Feel free to ask any questions. I have a big launch coming out, which is so exciting for me in the new year. I'm partnering with a major media company to launch a new personal finance website. And I don't know what it's going to be called yet. I actually am in charge of figuring that out. So I would love any suggestions. If you guys have any ideas for the names of cool names of a personal finance website, DM me on Instagram at Leanna, Leanna _HAWK. And for the best response, I am going to mail you a copy of Young, Fun, and Financially Free because I really need some help brainstorming. So yeah, stay tuned for the launch of my new website with Amply Media. And yeah, please help me try to figure out what I'm going to name it.
Okay, very good. And as well as we talked about in the episode, if you follow Leanna on Instagram, comment on her pictures.
Yes, please. I would love it.
Very cool. Very cool. So Leanna, thank you again so much. And I'll speak to you next time.
Sounds good. Thanks, John.
Always a pleasure having Leanna to discuss with. She's not only fun, but I always learn something new. And I hope you did too. And here are my key takeaways for today. First things first, Leanna encourages you to define your financial nirvana, as she says, or your best life. Some others says your rich life. And define what is it you want in life. What type of lifestyle do you want? Do you want a home with 2 cars and a white picket fence, as she says? Or do you want to travel the world? Do you want to have a big trip with your family every year, etc.? What are your wishes? What do you want? This will allow you to start planning around that wish, around that lifestyle. And with regards to the approach of millennials towards personal finance, the statistics are indeed scary. I was quite surprised actually that only 24% passed the test of basic financial knowledge. I've linked up the test in the show notes so you can try it out for yourself and see if you're financial literate or not. The test is US based though, so there are a few questions specific to the US market, such as retirement account and 401ks, etc. So you can skip those, but then you can see for yourself. And there are questions about interest rates and loans, etc., mortgages. So this can apply for all of us. So yeah, test it out for yourself and let me know how you did. And I really enjoyed Leanna's explanation as to why there's a true lack of financial literacy. She says that back in the 50s, nothing was automated actually because, there was no internet, etc. So you went to the bank, you got your paycheck, and this is the place where you learned about money and investing. And today, everything is much more automated, of course. Both your income and expenses are automated, but as well the distractions are automated. You go on internet to find out about opening a brokerage account, but you end up on social media or you clicked on a sale, etc. So on the one hand, there's never been so many books, so many websites, podcasts, blogs on personal finance, but on the other hand, there have never been as many distractions as today. And talking about social media and distractions, if you're not already following Leanna or myself on Instagram or Twitter or Facebook, etc., please do so. All the links are in the show notes. And number 2, don't be a stranger, as we said on the show. please comment on our pictures, on our tweets, etc. And we highly welcome DMs, so direct messaging. We'll be glad to help, to assist, or answer any financial questions, or even if it's about a food picture, we love it too. So please do so. Please do follow us and comment and like our pictures. And regarding stocks, here are a few guidelines that we discussed on during the show, which I thought was quite interesting to note. If you want to enter the stock markets, but you haven't yet, as Leanna says, you have to. And of course, you should be diversified, so you don't have all your eggs in one basket, the stock markets in this case. So be diversified with other asset classes such as bonds, real estate, treasuries, REITs, and there are so many more investing opportunities. And if you're young, time will be your friend, because the younger you are, the better it will work out for you, because in the case of a market recession, you will have time to recover the losses. And should a market recession happen, do not sell your equities, just don't touch them. That was the message. I also liked hearing her say that, in fact, you do not need to know 1% of what is being talked on financial TV shows or in the financial press. If you focus on the basics, you should be more than fine actually with your investments. And the last point about stocks is that ETFs are a great way to start investing in equities actually. It gives you diversification at a low cost. Just a quick definition of what is an ETF in case you missed it. So an ETF stands for Exchange Traded Fund, and it's simply a basket of securities such as bonds, stocks or commodities that trade on an exchange just like a stock. And as you heard on the show, I also made my mistakes when I was starting out. So I invested in companies without doing my proper research, my due diligence. So luckily in the case of Apple, it turned out well. But if you're starting out, I would recommend to just put a few hundred euros or dollars just to play with a bit, to learn how things go, because that's in the end the best education. Trying out for yourself and see if it's something for you. And the last key takeaway for today is about a chapter in her book, Young, Fun and Financially Free, which I highly recommend to anyone wanting to get ahead with their finances. And it is about building your dream team, which is a huge part of adulting. It is simply about knowing who you can reach out to for advice in various areas of your life. And these can be lawyers, notaries, contractors, mortgage brokers, and so on and so on. And I thought that was absolutely a brilliant tip from the book that is not usually talked about. So if you have, for example, some friends that have renovated their house, they're happy with the results and with the contractor, why not already take the phone number of the contractor? You might not need it right away, but maybe in 3-5 years when you renovate your house. So it's always good to be prepared. So that was it for today. Thank you so much for listening. It really means a lot to me. Make sure you subscribe in Apple Podcast. And of course, please do not hesitate to contact me. If you have any questions or feedback, send me an email, john@johnnytalks.com, or connect through social media at Johnny Talks on Facebook, Twitter, and Instagram. And amigos, once more, thanks so much for listening, and I'll speak to you next time.